In the US, we're seeing stocks and bonds getting a nice boost. Why is this happening? There's a big rumor going around that the Federal Reserve might be ready to cut interest rates soon. Investors are getting excited, thinking about maybe borrowing money might be a little cheaper if inflation keeps cooling down. It's got everyone talking, especially with the 10-year Treasury yield, the key indicator, taking a deep into its lowest in the last 2 weeks. Now, while the US is playing with interest rate, China is also going all in. They're going all in into tech. They're just pledging a mind-blowing $1.4 trillion to boost their tech industry. Now, think about this. This is not just an investment. It's China saying that they're ready to go all in AI, artificial intelligence, and they're ready to go all in semiconductors and even the 5G network. Now, if that doesn't grab your attention, I don't know what will literally grab your attention, because let's dig deep into what these moves means for everyone. Now, about the Federal Reserve, the rate cut and thinking about balancing everything in the US. The US is trying to keep the economy from tipping into a recession, while also managing some big global challenges. But here is the catch for us in Nigeria and across Africa and in the global south. Now, if they cut the rate, it could have a ripple effect in our economy. A cheaper dollar might sound good for them, but it means a lot of emerging markets that depend on the stable US dollar. It's like a domino effect. When they sneeze, the entire world literally catches a cold. And back in China, this $1.4 trillion isn't just spending, it's a strategy. It's not just spending. China wants to get around with US trade restrictions and literally avoid relying on Western tech. Now, so they are building their own. And this could shift the entire supply chain and create both challenges and opportunities for tech companies around the world. Now, shifting gears a little bit to what is happening in the media, Paramount Global, the media giant, while they have been doing pretty well in the streaming world, their platforms like Paramount Plus and Pluto TV, they are facing some headwinds with their traditional TV and studio business. It's like they're caught between the old and the new, trying to keep up with the big players in the streaming sector, while also dealing with less ad revenue and fewer blockbuster films. What does all of this mean if you look at the bigger picture? Well, now this moves, whether it's the Federal Reserve trying to cut interest rate and China betting big on tech, or the media companies literally scrambling to stay relevant, it shows us one thing: resilience. It's literally key. The central banks, the tech innovators, and media giants alike, all of them trying to stay nimble, adapting to its fast-changing global economy. That's it on the global market. When we come back, we're going to be taking a look at the NGX market and see the top gainers, the top losers, and how the Nigerian equities market is literally doing, because it's Friday, and who knows, you just might be interested in taking some profit. This is Market Pulse. The NGX maintained a positive performance today. You can see me smiling. It's supported by improving investor sentiment following recent earnings report. Now, the all-share index recorded a daily increase of 0.3%. The bulls literally took over, reflecting renewed optimism amongst a couple of traders. Look at what we have on our screen. The all-share index, 97,236.19 points, and it tells us what is really happening. It's a far cry from the 100,000 point level that a lot of analysts have been predicting, but let's keep our fingers crossed to see what's going to be the outcome of the all-share index in the first quarter of 2025. If we have the Dangote refinery listing on the floor of the NGX, perhaps it moves the all-share index the point. Well, it's quite a positive day, 0.3%. 0.3% gains in the market. The bulls literally took over. Look at the market capitalization, 58.92 trillion. Top gainers for the day. You're seeing Aradel literally closing 458.3, 458 naira 30 kobo. It's quite an exciting day for Aradel. I'm sure a lot of the investors will literally be smiling, because what a way to enter the weekend with this kind of profits, 10% gains in the market. They've been consistently amongst the top losers in the last 3 weeks since they listed on the floor of the NGX. But right now, we're seeing the narrative is changing. Corn oil also listing among the top 5 gainers, 9.94% gains in the market. Look at John Holt, 4 naira 81 kobo. That's some 9.82 gains. The bulls literally taking over. We can't find any what is it called, any banking stocks listed among the top 5 gainers. What's happening to the liquidity of the banks? This week is not, this day, today is not really quite an exciting day for a lot of the banks because none of them listed among, okay, we have FTN Cocoa, no, that's literally commodities. It's not the banking stock. Lasaco also among them. Let's take a look at the top 5 losers. What's happening? Who are the stocks on the bottom of the pyramid? Look at Maya, it's there, 9.9% decline in the market. Abe is also there, 9.83% decline. We have Etana, 24 naira 80 kobo, 9.82% decline. We have Sunu Assurance. Sunu Assurance, at the point in time, Sunu Assurance was the best performing, I love to call them penny stocks, sometime in 2020. And right now, see them among the top losers, 9.65% decline in the market. Deep Cap, 9.32% decline in the markets, 1 naira 7 kobo. That's how the market literally, let's take a look at the top traded stocks. Sterling literally led the activity with 119.3 million shares traded at a value of 620 million naira, followed by Access Corporation with 52 million shares valued at 1 naira 34, 1.34 billion, I beg your pardon, and GT Co with 22 million shares traded at 1.19 billion naira. Now, take a look at what is happening. Look at Sterling. We also have Access Corporation, Fidelity Bank, GTCO. We have 4 banking stocks among the top traded stocks. LLX is the only non-banking stocks that featured among the top 5 traded stocks. It looks like a lot of investors are literally excited about the liquidity in the banking sector. Perhaps, I guess that's why we're seeing Caesar coming for what belongs to him in form of windfall tax, because the banks are literally making a truckload of money, and it's a reflection of what we're seeing in the capital market. Ladies and gentlemen, we're going into the Pulse of the Day segment of Market Pulse. When we come back, we're going to be going right into the Pulse of the Day. We have Daniel FR, who's a senior business correspondent and senior business development and manager from PU Prime Africa. We're going to be having an amazing conversation with him as regards the market. This is Market Pulse. Picking up the Pulse of the Day, now joining us is Daniel FR, Senior Business Development Manager, PU Prime Africa. You're very much welcome to Market Pulse.
Good afternoon, Frank.
Yeah.
Nice to be here.
All right, good afternoon. The benchmark yield on Nigerian Treasury, Nigerian government bonds rose to 19.47% in the secondary market. Now, trading activities reflect a lot of moderate shift and mild sell pressure. What are some of the drivers for recent activities tracking the yield curve and a couple of happenings around the market?
I think that we've seen the yield, we've seen the bond yield do a bit of consolidation over the past few weeks. I think 20%, then 19, then back to where it is right now. I think that it comes with the time of the year. That's number one. We have to understand that investors are looking to take profits. Particularly with bond, we've done considerable numbers when it comes to bonds, likely due to the interest rates that we've had, and also investors are also looking at what will happen next in terms of what the monetary policy meeting will be for this month, right? Which I am still optimistic about another 50 basis point increase, right? So those are the things that investors are looking at. Of course, we know that there may not be any major additional borrowings from government until the next year. Talking about the new budget coming in, and also those are the factors. Of course, you know. They say when demand cools, right, the price also would cool. And that is what you're seeing with the yields. For me, going into the new year, we might still see us get to a 19 4% yield because, of course, the demand is still there.
Yeah.
The macroeconomic indices that reflects why we are oversubscribed in terms of our bonds and treasury bills is still there, right? So those are the things that will still fuel what the yields will be in the nearest future. But for now, basically, it's factor the end of the year and also waiting for what the MPC meeting would look for November.
So we just finished the analysis on the NGX. You saw it on our screen. Aradel is coming back strong today. They're back among the top gainers. Quite an exciting day for a lot of investors, Aradel holders. Do you think a lot of investors right now are done catching a falling knife? Do you think it's found at the bottom and perhaps it's time for it to keep going back up? And are we going to see a rebound?
Yeah. So I think the last time the first time I talked about Aradel was when the stock was launched and we were having this consistent day, and I said that basically what eventually happened is that it's going to find its footing in terms of finding the highest, the low, and then going back. Whatever happened initially was just, as in terms of the first day getting to 800, was just excitement, right? A lot of demand and supply will definitely come to bear, and that is what has happened. And I think that we can now officially say that the lowest for the stock of Aradel stock is 400, right? It has consolidated as 400, and we can now begin to see some upward movement. So now you're going to see a lot of investors coming to start buying the stock, which might there's a potential 600 move in the nearest future, even before the year runs out. So that is what will eventually happen with Aradel, and of course to get to his entry point maybe into the new year.
Are you sure?
All indications, in terms of macroeconomy, in terms of the company itself, would eventually happen.
Are you sure it's not a fake out? Because what we're seeing as the dust really settled.
For now, 500 is already close and going. Look. Okay, so there is a potential fake out, right? If a fake out eventually still happens, it will still test the 400 naira per share zone and still bounce back, right? Because fundamentals are in favor of an upward move of the stock. Do you get? So no matter what happens, 400 is still the baseline, and the stock will still move.
Okay, so we're tracking the oil prices slipping today, extending a sell-off triggered by the U.S. presidential election. Now, the oil and gas sector has benefited from high oil prices this year. What are your thoughts on how a Trump administration could potentially impact the sector that has gained impressive year-to-date, specifically on the NGX?
In terms of the crude, basically, we at PU Prime, we've identified that I think crude has done a relatively has stayed in a range, whether it is crude, whether it's WTI, whether it's Brent, within the $85 per barrel and $70 per barrel range all through the year, right? A lot of excitement is happening around Trump becoming president, and I think that it's important that we know that it is not going to be all that rosy, right? When Donald Trump coming in with all the extreme policies, are going to go back to fossil fuel and all. No matter what happens, if you go back to fossil fuel in terms of the US and they produce more, nobody wants to sell. Nobody wants to sell a resource so cheap, right? So because anything that gets crude or Brent below 65, it will be too cheap and create unnecessary chaos, but particularly for the countries that you get that are non-OPEC members. OPEC will still find its.
All right, there seems to be some technical glitch from your end, Daniel Effa. I don't know if you can still hear us. Can you hear me now? All right, so Daniel has been talking about the oil and gas sector on the floor of the NGX, the Trump effect, something I would love to call the Trump effect. And if you look at it in the broader sense of things, you would see that most likely a lot of analysts have been predicting the fact that the chaos in the Middle East is going to douse a little bit because of the Trump effect. And once that happens, the price of crude will drop. And you know what that means for the Nigerian economy, knowing fully well that we're an oil-driven economy. Our revenue will definitely drop. Daniel Effa, I don't know if you can still hear us, so you can pick.
Yeah, I can. I can hear you clearly. So as I was saying, I think we should not be too extreme in terms of thinking oil prices will drop, because OPEC is for the past 4 or 5 years has really maintained serious control of production cuts. So even if the US comes up with a lot of production, which I think will happen with Donald Trump, pricing is still a key factor, and we will still get the $70 per barrel range for crude going into the new year and even 2026, right? So no matter what happens with whatever Trump policy is, prices will still be in that range I cited earlier, $70 per barrel up into 85 at the higher boundary, basically.
Anytime you mention the word Trump, all I just think about is tariff, tariff, tariff. Thank you for joining us, Daniel Effa, Senior Business Development Manager, I beg your pardon, PU Prime Africa. Thank you for joining us on Market Pulse.
Thank you.
Up next is Key Metrics. We'll be right back. Today, we're diving into Nigeria's latest economic milestone, a current account surplus of $5.14 billion. Now, this is a major development with significant implications for Nigeria's forex stability and overall economic resilience. Now, the numbers, let's take a look at a few of the numbers. In Q2 of 2024, we saw that Nigeria recorded $5.14 billion current account surplus, a sharp turnaround compared to deficit in previous quarters. Now, this marks one of the largest surpluses in recent years, reflecting improved trade balances and remittance inflows. Now, so what are the key drivers? What really fueled this surplus? Number one is the oil exports. Nigeria's crude oil exports surged, driven by increased production and stable global oil prices. Number two is the non-oil exports. Agri commodities and processed goods, they also contributed to the trade balance. Number three is the remittances. A rise in remittance inflows from the Nigerians in diaspora significantly boosted the current account surplus. The number four on our list is reduced imports. Declining imports of luxury goods and a couple of tariffs and refined petroleum products also played a major role in stabilizing the balance. What are the implications for forex stability? Now, this surplus is good news for Nigeria's forex exchange reserve, providing a buffer against external shocks. It also strengthens the naira by increasing dollar availability in the market. Investors are taking note. As stable forex conditions foster confidence in the Nigerian economy, we're seeing a lot of sectorial impact. The oil and gas also remained really pivotal, but the diversification into non-oil exports signals a lot of growth. The agricultural sectors were as well, and the manufacturing sector. Look at what happened with the services and increasing, all of this increased Nigeria's current account stability. $5.14 billion. That's the surplus we had as regards current account. Amazing, amazing numbers, if you ask me. We have a long way to go as regards stabilizing our foreign exchange market. I just checked the time now. We have no time on our side, ladies and gentlemen. This is where we draw the curtains to the end of Market Pulse. Stay with us every weekdays, 4 p.m. to 4:30 p.m., where we take a glossary view as to what is happening across all markets. My name is Frank Fagball. I'll leave you with the Global Markets Index.